All right. So in this session, we're going to look at how to some of the details, um, and just to give us an overview of how to account for not-for-profit organization. At the end of the session, we should be able to understand the nature of a non-profit organization, how different it is from other business organizations, look at some of the financial statements that they prepare, and also how to account for certain specific aspects of a non-profit organization, like when they are engaging in other activities apart from their core business, and also some of the sources of income and expenditure that they are likely to engage in or have. So if we are thinking of non-profit organizations, I believe there are several of them that come to mind. The key distinguishing feature between this type of organization and a private firm or a profit organization is the fact that these organizations, their main purpose is not to make profit. However, there are instances where they could be engaging in some other activities, but of course, these are not their main reason for existence. So I'm sure you can think of some examples in your community, in your environment where you are. For the University of Ghana, we have our SRC, we have the Accounting Students Association, and then, of course, some football clubs that you may be aware of. Now, where do they get their sources of funds from? If you are a non-profit organization, one of your main sources of funds is through your membership dues. So the idea is that because your main reason for existence is not to make profits, usually members join in or they maintain their membership in the non-profit organization through the dues that they pay. So these serve as sources of income for the non-profit organizations. And sometimes also there are subscriptions that are also paid. Okay, so depending on the nature of the NPOs, members may be required to pay dues or they may be required to make annual subscriptions. There's also the opportunity to make what we call the live subscription or the live membership fees. So you can decide that you don't want to be paying every month because you think that you may forget. So you would like to do a one-time payment which qualifies you to be a member automatically. Or you can decide that you want to be paying your subscriptions annually. Okay, so non-profit organizations account for that as well. If there are some fundraising activities that they engage in to raise support for particular projects or to support some of the activities that they are doing, that also forms part of their sources of finance. So, for instance, you can have funds raised from their annual harvest or a dinner dance, and some donations also may come in to support their activities. As mentioned, apart from their core business, there are other activities that they may engage in. For instance, if it's a tennis club, they could have a small restaurant there and people may come in to take some water, some juice to freshen up. If it's the SRC, for instance, they could have a small bookshop where students can purchase stationery and other items and souvenirs that they may need. But remember, the core business of the SRC is not to sell books, okay, but they could make profits from such shops, and we need to account for that because it would also form part of their profits. So we account for these sources of funds um, to give us some more details, especially for items like the annual subscription and the life membership dues. So we need to know the amount of funds that members have paid, the amount of funds that they are owing. And for some who may even want to pay in advance, maybe I want to pay for 2 or 3 years so that I don't have to be owing. So I can also pay in advance and it's important that as a non-profit organization, you are able to account for who is owing, who has paid in advance, how much have we received for the year, and so on. Okay, so that you may know what your total income is for a particular period. As we know, because of the matching concept, it's important that all expenses and income that relates to the particular year are accounted for. Okay, and the same goes for the life membership dues. So you are expected to pay your life membership dues. As I mentioned, each year a portion of the dues is deducted and shown in the income statement as your dues for that particular period. Okay, so we keep that account, that money in an account for you, and then each year a portion of it is taken to represent what you have paid or used up for that particular accounting year. We've spoken about donations. It will come in the form of cash or kind, so that also needs to be accounted for. Sometimes people can donate a car or they can donate cash. So if it's a car, you know that it has to be captured under your non-current assets. Okay, if it's cash, you have to put it under your current assets. Sometimes some non-profit organizations will also ask members to come in as a first timer but pay the entrance fee. So usually this is a one-time payment that you make. Once you pay that qualifies you to be a member. Of course, you have to be making your annual subscriptions as well to keep you in good standing. Okay. Now, when we go to the financial statements of a non-profit organization, these three stand out. We have the receipt and payment account, which works like the cash book for the non-profit organization. And then we have the income and expenditure account, which will show all incomes received and all expenditure that the non-profit organization has incurred. And then, of course, we have the statement of financial position, which will show details of all assets, all liabilities, and then the components that relates to the non-profit organization. Now, the non-profit organization, because it doesn't exist to make profits, we do not have the owner's equity. Okay, we refer to that as the accumulated fund, and we'll come to that shortly. Now, if you look at the format of the receipt and payment accounts, the debit side, of course, is recording all receipts in the form of cash, and then the payment side is recording payments that have been made, either in the form of wages to those who are taking care of the extra business that the non-profit organization may be doing, like a bar, like a bookshop, um, that they may be running. So it's possible that someone will be there, okay, who is in charge of the shop, okay, and for that reason, there's a need to pay that person. And then, of course, the other payments like utilities, if they also make some donations to other organizations, they would also account for that as part of their payment. So we see the receipts and payment account showing details of the monies that have come in, donations, dues, entrance fees, subscriptions. All of these would feature under the receipts, and then we have the payments as well. Now notice that we have two balances there. You have the balance at the beginning and then the balance at the end. So what's your opening cash? And after you've made all your payments, after you've accounted for all the money you have received, what is the balance at the end? Okay. So your balance at the beginning and your balance at the end. You remember that all your balances at the end, if you're accounting for your statement of financial position at the end of the year, you are interested in your closing balance. So your cash balance carried down here is your closing balance. You need to move it to the debit side, like we do in the T accounts, to show the balance at the end of the month. And then we're saying that this will go into your statement of financial position at the end of the year. If we look at the income statement also, we have the subscription that will come in for the year. Okay, after you've taken record of those who are paid in advance, those who are owing, all monies you have received, you account for the portion that relates to the particular year because of the matching concept. And then also we show the bar profit from the other activities that the non-profit organization is engaged in. And then of course we take out our expenditure. Donations here is to outsiders. Okay, we treat it as part of expenditure. Now the difference, if your income is more than expenditure, we have excess of income or we have surplus. If your expenditure is more than your income, then we have excess of expenditure over income, and that becomes deficit. Okay, but you need to account for the subscription. You need to also work out your bar profit before you show them in your income and expenditure statements. Now, if we compare the terms that relate to a profit organization and a non-profit organization, we see that for a profit organization, their income statement is showing our revenues, or our sales, our cost of goods sold, and our net profit. Okay. Now, for a non-profit organization, in the income and expenditure, we are not going to see net profit. Okay. The bar profit is not the same as the net profit for a non-profit organization. So we'll see excess of income over expenditure or surplus. Okay. And then we don't see owner's equity. As I mentioned earlier, what we see is accumulated fund. How much has the non-profit organization accumulated in terms of funds? Okay, but it takes the same concept as we have in the accounting equation. So your assets minus liabilities will give you your accumulated fund. Net profit and net loss, we've mentioned that excess of income or excess of expenditure over income will give us either a surplus or a deficit. So it's important that we remember these terms as we describe a non-profit organization. If you've been hired as a treasurer or a financial secretary for any association, then you will be preparing these accounts and these terms will be familiar. So we'd like to task ourselves to find the accumulated fund for one non-profit organization, and you can check out the video on that.